Good evening, all. Ira Epstein, and here we are on Monday, and it is the 17th of November, 2025. And I have to tell you, I feel great. Back, had neck operation, back operations. I had another issue they took care of. I feel like I've been in the auto body part shop. In fact, I just got off the phone with my auto guy, and he'd give me parts to buy, bought them on eBay. They're all the wrong parts. And I gave them VIN numbers, everything they asked for. So tomorrow, I'll have another issue there. But we have an issue here in the stock market. You know what it is? A lot of red. And why is it a lot of red? Well, traders keep talking about the overvaluation that AI is, that it's not going to be what people think. And I think they're totally wrong. I think AI is revolutionary. I expected AI to quickly, once they said you could start doing things, to quickly impact jobs. I saw in my own company, my IT guys and I built where at nighttime I don't have to spend any longer, an hour and a quarter, posting these updates. Do things at first go wrong? Of course they do. Do you fix them? You do. Will they be right most of the time? Probably so. I'm not using AI for trading. I'm using AI to remove human bodies, to save myself time. That makes all the sense in the world. Well, that's what America is doing right now. I'm hearing that 25% of the grads that are going to come out are going to have some troubles finding jobs. They got to figure out where do they want to go because and part of AI. Well, AI has twofold. Number one, it won't just replace people. It'll create new ideas for new jobs. Please remember that. Now, back to the marketplace. So what this market is doing is it became a market that they being the TV announcers, tried to sell you on the idea that AI this, there's going to be a rotation, the PEs are wrong, people will buy these other companies. Suddenly, today, all the big revisions in Dell, HP, we're not getting what they said we were going to get. Some of the different drives that are in those, maybe we don't need those type of drives. I'm hearing all kinds of stories. Let me tell you where I think we're at. You're in a mini correction. Not a big one. You're in a mini correction. You'll see it on the charts. That's where you're at. Nothing has really changed. Earnings are still good. The game changes if one thing happens in a way on Wednesday. If Nvidia is a miss, and I haven't even defined what a miss is yet. But if Nvidia is a miss, meaning the market says that it's a miss, and the market starts diving on Nvidia, it carries everything with it. Because this is a market right now that is a sector market, and the sector that is working real well has been AI. We know that there's a medical sector going on. All we do is read every day a new medical company's going after somebody else in order to get a head up on a new drug and or a new weight loss way of doing things or a cheaper way of doing things. But that's another sector. The financial sector has been strong. You're not hearing the bank stocks getting hurt, are you? I don't hear that. So you got to know where you're at a little bit in the market. Now, as I'm looking, Amazon coming down. We have the big sales coming up. I'm getting my pen ready. There's a bunch of TVs I want to buy right now. I was pricing out 95-inch TVs today. Oh my God, are they getting cheap? Netflix, reverse split now. So if your $1,000 share is now $10, okay? You got 10 more shares. It's not reverse, it's just a stock split. So you got 10 for 1 actually on it. Apple getting hit. They're going to come out with 6 phones a year. This is craziness. I don't think that I'm up for 6 phones a year in a release. Why do you have to do that? What's wrong with 2 times a year on the release of phones? I'm not into what they're doing. I'm hearing that Home Depot should be out of favor. Restoration hardware, because people aren't going to redo their homes. Why aren't they redoing their homes? Well, inflation is still up here. The question is, how are they going to get paid? Interest rates are still relatively high. That is something the president has to go to work on, and he's right. We do have problems in that area, and that's what you're seeing. In the metal markets, if we have so much inflation, don't you think gold should be acting good? Yet it's not. One of the stocks that was up was Tesla. Well, Tesla's not a car company from some people's point of view. They're going to be autonomous robots now. Google. Obviously, Google, if you get Berkshire stepping in and they're buying a huge amount of the company, what was it, near 4%, 5% of the company, you're going to get the bids in that. Now, I didn't change AMD. Write me. What do you want me to change to now? I'm back. You'll be getting my updates. I intentionally took this weekend off to be sure I could stand right, be in front of you. And yeah, it hurts a little, but it's bearable. As I look at the chart here, I see a market that still has the higher lows, higher highs. It won't take much if you get underneath the lows of Friday to create a problem here where you suddenly have lower highs, lower lows, and maybe the market makes a run to the Bollinger Band to 230.88 level. If it wants to completely let go of the market, well, then you have two moving averages. You've got the 200-day and the 100-day. I don't think that's where you're going. So I just kept the 100-day right there. I don't think you're going to fall apart is what I'm saying. Do I think you're caught in a trading band? Yes. Do I think there's some downside bias? Yes. You're under the 18-day average of closes. Momentum, not sharply lower. Momentum can drop more in this market, but it's just turning a little bit. It can turn up on a good day tomorrow. So be cautious. Don't get caught up with the crowds. Reddit has been sinking back. You have the lower highs, the lower lows. Each time you've hit the Bollinger Band out of the past week and a half or so, the market has found support. Why shouldn't it do it this time? Momentum down, trend down, bias down. This is not an uptrend market. This is a downtrend market right now. Dutch Brothers, the coffee. Lower highs, lower lows. When it was coming up here, I know what I said, as bad as I felt last week. I said, I'd be careful. I'm not convinced this market's going anywhere as you came back up to that upper top. I still feel that way. But would I tell you, I'm asking the question, would I tell you to go short under a Bollinger Band? Isn't going to happen. That doesn't mean you can't go down from here. You're clearly in a downtrend. But no, it's not the place to be adding shorts in my position. Roku, we had that one phenomenal day of a rally right at the very beginning of the month. It never looked back after that. It became a top with lower highs, lower lows. Now I'm looking for the pros to cover all their shorts right here. Starting at the, what is this, 94.90 to 94.54. You're in the zone. That's where I'm looking for the shorts to come out of the market. I'm not saying they're going long. I think that they're covering their shorts. I haven't said that yet. Netflix, all it did now after it's had the 10-for-1 split is it pulls back in. You have more shares. The market came down. The market knew we were going to get this, and you're under the 18-day average. Do you see a trend here? Not yet. You have a lower low, a higher high. There's nothing. This is a place not to be. Uber, not the place to be. You have a higher high and a lower low. It couldn't on the rally get up and over the 100-day average in green, nor the 18-day average of closes. So you fall back to the Bollinger Band. You're oversold. Let somebody else want to go short. Has their business changed? No. I would just back away. Markets take on characters. Right now, the character of the marketplace has been taking money off the table. That money's going to look for a home to go. When you look at Tesla, nice that you're getting a bounce, but you did make a run on Friday for the lower 100-day average of closes. 2 days you were under the Bollinger Band, so you got a bounce today. Okay, that's not a trend. You still have the pattern of lower highs and lower lows. It's a bounce in a market that has resistance back up at the 440.80 area, and it's very oversold. I think the pros came out on both Thursday and Friday as you hit the Bollinger Band and you were oversold. Joby's never been able to pick itself up and make anything airworthy. How do you like that play on words? You know I'm feeling better. I'm concerned that the 18-day average is getting ready to cross the 100. That isn't good. That could be more downside. You are oversold. You're at the Bollinger Band, but this is your big resistance. It's going to take a lot to get through there, not the place to be. We then look at XLF, the financial services. And how good had we heard just 72 hours ago? Watching TV, the financial services, it's all over the people on TV talking, that's where you got to be. This is the hot area. Of course it is. And then the market just came crashing down on them as everybody's realizing that we're not ready without the right information to change the interest rate structure. Don't buy for 2 seconds that the Fed has to cut interest rates in December. They've already given you 2 cuts. The people that are calling for the cuts are Waller. They are Myron. Okay, they're up to be Fed chairs. They're going to do whatever Trump says they should do. But without the data in hand, the people that aren't up to be the chairs are probably saying, we need to see some data. What are the jobs data looks like? What are employment claims looking like? Tell me what the CPI is doing in the economy. We've had third party. Now we want to get the main stuff. I was impressed today when I saw the New York Empire, the Fed survey. I mean, those were big time numbers, something happening in New York where everything came alive. But that's not a reason to cut interest rates. And to me, that was bearish. It was my first instinct in the market. I'll bet the market falls on that. And if you go to when that came out, and you start looking at your chart action, I think you're going to see a picture. When you look at XLI, you came up, it's having great trouble getting through the upper Bollinger Band, and it seems to be able to sneak through for short periods of time on the lower band. It is certainly not a bullish market, nor is it a bearish market. It's nothing. It's a trading a fair market that catches the trader at these 2 extremes, and it's probably doing a lot of pain to the people looking for hold-on trades. I don't think it's there. On the energy sector, we've been coming up, as you can see. Okay, we'll see. Goldman today came out and gave some ideas on where they think the energy sector will be for next year, and it's in the 50s. They think 3 years out will be $75, $80 a barrel. I can't disagree with that from what I know right now, but what I know isn't an awful lot. We want to see if Iran is telling the truth. Iran claims they are completely through enriching uranium. That would be if them saying it and actually being that way and believing them will change the face of the Mideast because they want to open themselves up to trade. The Trump administration is talking a 500% tariff on countries that buy Russian oil. That's an important number. It gets one's attention because if it's across the board, you're not doing business with the United States. And if you get Europe to join in, who is also against Russia, you got a big problem. So Russia, like it or not, you have a problem coming your way, and it's a very big one. So if this market gets underneath the lows that we made on Friday, yeah, you probably get back into the combination of the 18 and down here. You're overbought as can be. I see nothing that's screaming buy me on that. In the gold market, just because it went up there doesn't mean that it didn't get itself overdone, and it needs to sit a bit. I think you've got to consolidate this move. I've said that to you earlier. I haven't changed my opinion. You typically get a year-end rally in the gold market. It goes pretty long. So I'm watching. Is this a zone where the market's got its first area for support? Absolutely. You're on it right now. What you don't want to see taken out is right through here in the gold shares, the 361.39 level. Barring that, the market's looking to see, can that be the support zone? You're not seeing that in Palantir. You've got the opposite. You got the higher high, and you went and made a new low after a new high. That isn't very good. Now you're back down to the 100-day average in the Bollinger Band. You're oversold. I can make all kinds of arguments to no longer be short if one were a bear. I can make no argument on that chart to buy it because you're down to those numbers. I can make all kinds of arguments to cover shorts. We come to Microsoft. It's fighting a major league battle at the 100-day average. Can it get over it and start something to the upside? I mean, this company has everything going for it. Who doesn't use Microsoft for something along the line? So, but it needs a close over the let's call it the 316 level, the 18-day average of the close zone. Barring that, you just are in a market that's working its way up, and with everything around it falling, there's nowhere to go. Then we get to BND and TLT. I'm not seeing reasons for interest rates to drop. I wish I could tell you I see that right here. I see the Fed's going to do it. I'm not seeing that. I'm seeing a bearish trend that is oversold. Certainly not one that I'm telling my clientele, hey, got to be short the market. But I promise you, I'm not telling them to buy the market. In the dollar, you've had the swing line down into the 18-day average, which is a correction move. That is how you get a correction. From here, the market tells us what it wants to do. If it's going to base out, it's got to keep playing at that 18-day average a little longer. You have lower highs, lower lows. Let's assume you get up and over here right to this number, which was, what, 2 days ago? 3 days ago. Let me get over to it. One more. There we go. So the 28.15 level. So, you got to get over that number and prove you can stay over it. I guess it's 28.22 in order to prove you can do anything. That's the number, and that's what it is, 28.22. Then at least you can start arguing out of bias is proving it can hold up. FXE had a rally. Is it going to be able to hold on to the 18-day average of closes? Big question mark right here. Should the market get underneath the most recent low that you see right here? That's a problem for the market then. Then you break this pattern. So right here, the nibblers, that's what I want to call them. Nibblers are probably stepping in 106.83. Really tight stops. They're risking pennies in the market. Will it come back up and let me out here? But they're not playing for much. They're playing for pennies all the way through. They can trade a lot of volume for the pennies, but that's what I think they're doing. In terms of news for tomorrow, Redbook retail sales, they're coming out first thing in the morning. They've been running now 5.5% or so. So it's no longer over the 6% numbers. They've slipped back. We're not going to get the Federal Reserve industrial production and capacity utilization reported just too soon. While the government's open, you don't have the data. You will get U.S. factory order data for August. I mean, is it worth anything? It's for August. They're forecasting the orders up 1.4%. July, we're down 1.3%. And the API numbers, well, they're due to come out at 3:30 in the afternoon. Now, I still am going to say this again. It's Wednesday. Nvidia's numbers that if you're trading S&Ps and you're trading stocks and you're looking at all that, that's where you want to be looking. I'll be writing about it in my free offers. I'll be covering it with videos and so on. To get this, you just move your cursor to the top up here. Sign up for the free offers we have. There'll be another right up in this area. If you're on Facebook, you can watch what I'm doing through there. You can get the charting services. You can see my writings. If you haven't seen it before, I don't keep giving away the same thing free to the same people over and over. That's why you see me here. If you missed me, I love it. But I didn't miss putting out my subscription services. I don't know if you're aware of that. My paid subscribers, through pain and agony, I was doing everything I could for them, and I think I did an okay job with it. Now I'm back, feeling pretty good. Take advantage. I'm Ira. You have yourself a great evening. Hope you watch the other videos. I'll catch up with you in the morning, as usual, and in those other videos tonight. Have a great evening.